reward ratio worked out, we need that win-loss or winners to losers ratio as well. So it's the number of profitable trades over the total number of trades. If we can get that greater than 0.5, it's acceptable. The closer to 1 that we can get that, obviously the greater the profitability is going to be. And then we're going to look at the average gain of our positive trades against the average loss of our negative trades. Profit and loss is important because it's how we're performing, and obviously we're going to assess that from time to time. It's going to indicate if we are reading the market well, and of course if we are, then we're going to see our trading account continually increasing. What we need is for our average gain to be greater than our average loss, and we're looking for that average gain to be greater by at least double what that loss would be, and then that is confirming that our risk reward is working out correctly for us. It's important that once we have sufficient data, maybe a month, 2 months, 3 months of data minimum, that you go back and you assess all of that. So you look at how many winners you've had, how many losses you've had, look at the amount of winners to losers, then look at the average profit to the average loss. Also, when you're analysing that, you can get a little bit more granular with that analysis and look for your best and worst trading sessions, because then you know when it's your best trading sessions, generally over time, that's when you should be more confident going into those trades. And when you've got your worst trading sessions identified, it doesn't mean you should not trade in that time, it just means you should reduce your volume, your commitment right down, but practice, so eventually that's no longer your weakest trading session, and that will move and move and move, because you're going to keep sort of going back to your weakest session each time to try and improve that condition.